Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, welcome back to the show.
Jim, it's a pleasure to be back.
John, on Monday, Barrick-Newmont decided to pool their Nevada assets on a 61.5% Barrick and 38.5% Newmont basis as a separate entity. What does this mean for Nevada exploration?
I think it is a very big deal for Nevada, probably better than merging the two companies, but it probably means some job losses because part of the big pitch is that they can gain considerable synergies by eliminating these inefficiencies through their separate operations and stuff like the administration, supply chain, and transportation. So it's not a great deal for workers in the short term, but there isn't really much other mining activity going on in Nevada except for small-scale mines like McEwen's Gold Bar. But the synergies that they hope to squeeze out of pooling them have a net present value of $5 billion at 5% over 20 years. That's a present value estimate of future cost saving. And Barrick's been bugging Newmont to do this for quite a time, but I suppose it took the arrival of Mark Bristow as the new CEO to swing them over to the idea. And they probably also had considerable encouragement from shareholders. Analysts came up with this sort of 61 to 38% split based on their analysis, and the timing just seemed right to do this. Bristow only had a 1-month window to try and disrupt the Newmont friendly merger with Goldcorp. It was a hostile merger proposal that Barrick made to Newmont. There was no premium offer to Newmont, so there wasn't exactly a lot of incentive for Newmont to participate in this, and they did in fact reject it. So what they will now have is a company that has a 28 million ounce resource base. Last year together, the combined operations produced 4.1 million ounces at an all-in sustaining cost base of $775 per ounce. And when you just treat that as a separate entity, owned 62% Barrick and 38% Newmont, it would rank third place in terms of gold production, behind Barrick with 5.7 million and Newmont with 5.1 million from all their other operations. Now, it'll also allow them to pursue a more effective exploration strategy in the two key mining districts where they have adjoining operations. One is the Twin Creeks Turquoise Ridge District at the northern end of Kelly Creek Basin, and the other is the Carlin Trend, where Barrick dominates the northern third with Goldstrike and Newmont the southern two-thirds with the so-called original Carlin operation. They think they can end up lowering the cutoff grade and thereby increase resources over the long term. And this is without gold going higher in real price terms. The other thing, but the negative implication is that they're probably not going to do any exploration outside of their pooled holdings. It will likely continue to be mine site exploration because the best place to find more resources is near an existing mine. And so the question comes, well, is Nevada going to become cold? Newmont's going to be busy dealing with all the Goldcorp assets. In his PDAC talk, Rick Rule was rubbing his hands at the prospect of the divestiture that the big companies are going to be doing. He's already assembling technical teams to plunk into shells, which will then acquire the assets that are being disgorged by Newmont. An example that took place a couple years was Pierre Lassonde's shell called Orla Mining, which acquired the Camino Rojo project that Goldcorp bought for $300 million in cash in early 2010 when it took over Canplatz at $4.80. A more recent example is Aldebaran Resources, the spin-out from Regulus. It's earning 80% of the Alter copper gold project in Argentina from Sibanye Gold by spending $55 million over 8 years and paying $30 million in stock and cash. That's a fraction of what Stillwater paid $325 million in cash and stock in 2011 when it took over Eric Friedland's Peregrine Metals. Clearly a big blunder by Stillwater, which inherited the Alter project when Sibanye took it over. So Bay Street's going to be reabsorbing a lot of these duds until we get a significant uptrend in the price of gold. They're not going to be interested in the optionality, but you're going to see a lot of exploration go into these systems to see if there's a lot more to them than the big guys were able to figure out after they acquired these assets. Now, but on the plus side, this Barrick-Newmont pooling of Nevada to create, in essence, the largest, makes it clear that this Nevada is the largest gold producer in the world. It puts the spotlight on Nevada, particularly northern Nevada, where the basin and range topography has hidden half the region under the gravels that cover these down-dropped basins. And, the PDAC conference, to me, was a bit of an eye-opener in terms of the thinking. On Sunday, the technical session was all about undercover exploration, methods for finding blind deposits that have nothing outcropping. And one of the talks in there was James Buskard talking about hydrogeochemistry. And hydrogeochemistry is nothing new. It's been done for many decades in search of copper and zinc. But for gold, it's less than 20 years old because gold only dissolves at parts per trillion, and the lab's detection limits only achieved that low level in the past couple decades, and nobody's really been applying hydrogeochemistry. But this little junior has spent the last 15 years in the Nevada wilderness, spending $15 million collecting 6,000 samples in a portion of the 260 pediment areas where conceivably a lower plate window hosting a Carlin-type deposit could be hidden. And this is now starting to get the attention of people because another technical session on Tuesday dealt with the western United States returning to known districts. And in the one that dealt with the Carlin, the North Nevada region, the Cortez one, they treated John Monteith's theory, which is maybe sort of 6-7 years ago, and which is what got me initially very excited about Northern Nevada. They treated it almost as mainstream gospel. And if this theory is correct as to how, Carlin-type deposits formed in Northern Nevada between 42 and 25 million years ago, there is no reason to believe that Newmont and Barrick have it all. They just have what has been found. Everything out there is still open season. But doing this type of exploration is extremely expensive. NGE has drilled 8 holes and demonstrated a blind lower plate window intensely altered with Carlin Pathfinder fluids. They don't have an ore body yet. They need to drill another 8 holes just to complete the scout drilling grid and then begin the vectoring process. That's like $4 million. That's not like your little outcrop where you get a $500,000 budget and poke a few holes underneath it to see if there's something there, kind of like Evern did with that Mexican project where managed to snag $7.5 million from Newmont over this fancy outcrop, and once you drilled underneath it, there was nothing there. Here you start with nothing at surface, and then you need to build the geological context and then track down the ore body itself. But NGE got a big boost a week ago when Simon Griffiths joined up as a technical advisor. He was the chief geochemist for Barrick until a couple years ago when he was made chief geologist of South America, and then ended up as a free agent when Barrick decided to can the entire South American exploration department. And if there's anybody who knows about how the geochemistry of Carlin-type systems work, it would be Simon Griffiths. So here we have somebody now connected with it. But will they find a sort of strategic partner that is willing to support spending millions of dollars tracking down the ore body within something like the South Grass Valley lower plate window and spend more sampling these other sediments in these basins where nothing is known to exist, that's hard to tell. The company was quite busy during PDAC with meetings away from the booth. It's different than in prior years where they were always there telling everybody about, here's our wonderful concept, and people would sit there and nod and do nothing. But one event that took place on Monday, which may have a bearing, is the announcement by Newcrest Mining to invest $805 million U.S. to buy 70% of the Red Chris deposit in the Golden Triangle. That investment bails out Imperial Metals. It basically makes it debt-free. It gives Newcrest a major foothold in the Golden Triangle. It plans to tackle the deep, richer portion of the Red Chris deposit by applying its block caving experience that it has from its Cadia Hill mine in Australia. It is the 8th largest producer in the world. It's signaled that it likes the Golden Triangle and will probably expand its footprint in that region. And while I'm looking at this, I'm thinking, okay, well, there's a lot of money that just went into the Golden Triangle region. They're probably not going to be interested in Nevada. But then you consider almost everything good is already currently owned by Newmont and Barrick, and is going to be inside one Powerhouse, which at some point will probably be spun out as a public company so that it isn't just by math the third largest producer, but is actually an existing company that's completely Nevada focused. If Newcrest has spent so much money up in the Golden Triangle, and the rest of Nevada's potential sits outside the Barrick-Newmont holdings in projects that somebody like an NGE could tackle, why not Newcrest pursue a strategic partnership with Nevada Exploration Inc.? Now, I'm not aware that any such talks exist, or that even Newcrest is aware of that. But the whole point of this, all this spotlight being put on Nevada, I don't think there's any mining group out there that isn't there looking at this and thinking, do Newmont and Barrick really have it all?
We'll have more with John Kaiser right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, Midland Exploration recently published an update on its Mithril project in Quebec. Are we closer to a big discovery?
Well, the original story was they had all these boulders and even outcrop that was running copper as high as 17%, massive sulfide, chalcopyrite, also with molybdenum and gold and silver credits, and it'd been traced for a strike of about 4 kilometers. But was this just some narrow freak? At first, they did a magnetic survey, and they saw a mag anomaly correlating with the trend of the boulders and the outcropping material. But then they conducted an IP survey, which measures chargeability, or in other words, the conductivity. And this is caused by sulfides. And the concern was there wouldn't be much there, but they got a substantial anomaly that's particularly strong in the southern or the western 2 kilometers of this 4 kilometer trend, and bulges maybe several hundred meters wide. And it's a fairly intense anomaly. And And you say, well, pyrite and pyrrhotite, which are iron sulfides, they also cause chargeability highs and are usually the explanation for all these IP anomalies that the juniors like to drill. But Gino Roger, pointed out one thing. He said the reason this thing sat there open, it's actually not an undercover story. It's an outcropping system. Is that there appears to be no pyrite or pyrrhotite anywhere as part of this system. It is all chalcopyrite, and that doesn't rust. So the usual way to find these systems is when an airplane flies over something, anybody looking out the window will see some gossiness, rusty area and say, there's sulfides down there. Wonder if there's any of the metals that we actually want, like copper associated with it. And they'll go down and take a look at it. And in fact, there is nothing visible from the surface. And the question now arises, how much more of this sort of stuff is there in this part of the James Bay lowland, which is north of the Eleanor mine? So they maybe have even started now, but if not in the next week or so, are starting a 2,000-meter drill program, which will test what in essence is a 200 to 300 million ton footprint of rock, and that's based on the sort of couple kilometers of strike, several hundred kilometers width, and several hundred meters deep for an open pittable resource. And the question will be, what's going to be the grade of this system? And that's a very important question, because even if this turns out to be a large copper mineralized body with gold and moly credits, it has to be fairly high-grade copper, because this is a very remote region. The Eleanor mine exists because gold bars, when you produce them, you fly them out. But copper concentrates, you will need to build transportation infrastructure to take it all the way to the St. Lawrence Seaway at Set Eels. And that means the deposit, the discovery, has to be substantial. So there are a lot of eyeballs on this drilling program, not just the shareholders of Midland and everybody else with land in the area, including a bunch of juniors that have pegmatite lithium projects next door and could suddenly find themselves in the middle of a staking frenzy. But it's also the politicians who are behind Plan Nord, because to really open up the Plan Nord region, to justify it, you need a substantial base metal discovery that says, okay, bring in the infrastructure to get the concentrates out. So a lot of eyeballs on that. The stock's up there, $1.30, $1.40. There's 70 million shares out. It's a pretty good valuation for a project that does not yet have a discovery hole. But the geological context is very sexy, has a lot of potential, and we'll have to see what sort of intervals and average grades they get when they start pulling these holes in the next few weeks.
We'll have more with John Kaiser right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Welcome back. We're speaking with John Kaiser. John, do you have an update on the deep hole PGX Resources is drilling on the Vine project in southeastern BC?
Jim, while I was at the PDAC, I had a chance to connect with John Keating and get an update on this very high-stakes program. He told me that the very initial test hole that they did on some sort of a very shallow target intersected what they suspected it was a human artifact, some aluminum pipe. there was a second shallow target, not quite as shallow, and they drilled a hole into that, and it had a magnetotelluric anomaly, and they were able to intersect a fairly skinny 0.8 meter vein with zinc mineralization in it. They're not quite sure it explains the MT anomaly, which is supposed to indicate massive sulfides. But they think that maybe there's some other stuff going on because it's very close to the Moyi fault that has sort of obscured that. So they said, okay, we're going to have to now drill the big one. And they drilled an angle hole, but they lost that hole, which was a bit of a bummer because their hypothesis is that the target, the very large magnetotelluric anomaly that's at somewhere between 1,000 and 1,400 meters, they think it is a former SEDEX-type deposit similar to Sullivan, which has been folded and remobilized to become similar to the Broken Hill zinc-lead deposit in Australia. And so they suspect that these zones may have a vertical orientation, and they were hoping to hit this with an angle, but the hole underwent way too much deviation, so they gave up and are now drilling a vertical hole. And last week, John Keating told me that they were about halfway down, which means it's not going to take it's going to take a little longer to do the other half because drilling progress slows. But they figure in a couple of weeks, if there are no problems, they should be somewhere down there between 1,000 and 1,400 meters and start to see in the core what may be causing this MT anomaly. And they're obviously hoping that they will hit the massive sulfide with sphalerite in it. They believe that the Vine vein, which outcrops at surface, which is about 800 meters from this deep MT anomaly, is remobilized material from this source. And that Vine target it's got a couple million tons of high-grade zinc in it. That was the focus of past exploration. But this new target is only about, indirectly or directly less than a year old, and indirectly about 4 years old. They did a gravity survey about 4 years ago, which showed two substantial gravity anomalies. This is the eastern one, and they drilled a couple holes in 2015 and got sniffs of sphalerite, but nothing to really explain why do we have this increase in density in this area. And last year, they decided to do this magnetotelluric anomaly, and it turned out that this showed the target was actually offset a bit to the west from the gravity anomaly. So now they think that the interpretation of the gravity data ended up creating a distortion in where the target actually is. And the size of both of them do correlate well, and they're hoping that the magnetotelluric anomaly signaling the massive sulfides will be the location where this is. So this is a high-stakes hole. We're looking for, a successful Sullivan 2 hunt. The Highway 50 group next door at Monroe Lake, they're busy figuring out how to finance the next stage. They are still convinced that underneath Monroe Lake there's perhaps an undisturbed Sullivan SEDEX-type deposit. Both of them are almost within a stone's throw of each other. So a lot of people watching PJX and its Vine drilling play with its deep hole will know in a couple of weeks whether they have hit it. If not, they'll have to do some downhole geophysics to see if the massive sulfides are offset somewhat, and then perhaps be able to do some wedge holes to angle towards the target. So again, a high-stakes play. A discovery like this, if it turns out to be a Broken Hill equivalent with the sort of scale indicated by the size of the anomaly, that would certainly be a big boost for the junior exploration sector.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.